Welcome back to Market on Close. Let's talk gold. Let's talk BTC. Scott Bauer is back with us, CEO of Prosper Trading Academy, who's been sharing his approach here on trading gold over the last couple months. So, Scott, when we spoke last week, I believe you were describing gold as kind of in a no man's land after it broke down and was kind of sitting here within a range. Now we've bounced and we're coming up on the previous support area, which, I don't know, is this a better setup now to think about a trade?
So when I look at this, Oliver, you're right. It was range bound, and I said it was kind of no man's land, and it is coming up. And I'm looking at GLD. We can look at gold as well. It's coming up to some serious resistance here. And if it breaks through, it's free, free reign ahead. Now in GLD, the ETF, what I'm looking at is the area of about 176.5. So not too far from here whatsoever. That is resistance. That's the 50-day moving average. If it breaks through there, which I actually think that it can right now, then this thing's going 178, 180 pretty quickly, which would mean we could see gold actually touching 1900 and above here pretty quickly.
I think that's a really interesting approach. 176.50, as you have labeled it here, for resistance, a 50-day moving average. And then it's also, as you point out, just right in that range that we bounced off several times before. So no matter what you kind of use to slice it, it does seem that this should be resistance, right? I mean, that's kind of the way you approach it is we don't call it resistance until it's demonstrated that. Right now it's kind of this theoretical area that could be resistance.
Exactly.
So if it doesn't serve as such, then you've got the trade setup here that we were looking at as a way to capitalize on playing that continuation of a rally, not, in an explosive way, but then to explore kind of the next potential area of resistance.
Absolutely, which is like 178 to 180, which I think we get to really, really quickly here. So what I'm doing is in GLD, I'm buying the December 31st, last day of the month of the year, the 175, 180 call spread. Okay. I can do that for about $1.75, or I'm trying to do that for about $1.75 or so. I really think that, again, Oliver, if we get through that resistance, which, all of the stimulus talks, the weakness on the dollar here, if that all holds in place here, I definitely see this rally going through the next 3-4 weeks.
Okay, so you're not waiting to see if it moves through it. You want to get ahead of it in case it does, then you watch it lift off to the next level.
Exactly. And listen, I do it with options because if I'm wrong and it does meet that resistance and it hits a wall and kind of backs off a little bit, okay, I know what my risk is. I know what my defined risk is. I won't let this thing go to zero. I'll probably bail out of the call spread, but I really think this thing is going to break through.
Scott, I'm curious if, since we're kind of testing this to figure out how we describe this area for 175, 176, I just want to explore this a little bit more because I know there's a lot of folks that have been trading gold, is if it does get stopped here then, and it looks like we are going to reach resistance around 175 to 176, do you yank the trade off entirely? Do you take off the bullish side and then let the other side run if we then approach this from a more kind of bearish perspective? Or do you then want to just see, okay, how much downside is there as a result, and do I wait to get in on another move lower?
Really good question, Oliver. And for me, just my experience, I'm doing this 30 years almost. My experience, if it hits that resistance and kind of, just hovers a little bit, doesn't really hit it and move down, but hits it and doesn't move, that's a really bullish sign. Now, if it hits it and we see a 1 to 2% drop off of that, that's probably where I bail out of my trade. But if it hits it and then just kind of, moves sideways a little bit here, no, I'm staying in it.
Okay. All right. And it looks like right now, not a hard rejection. I mean, it had some trouble today, but didn't reverse all the way. We're solid at 0.5% higher. Scott, just real quickly here, a thought on BTC as we've kind of flipped, places now, gold and Bitcoin. Gold's been having a better week, whereas Bitcoin is just kind of slowing here. What do you make of the plateau in this action over the last quarter?
That's the point, Oliver, is that it's slowing and volatility has really, really consolidated in Bitcoin. And every time we've seen that, it has been kind of a precursor to an explosive move one way or the other here. There's two really important levels here, Bitcoin, to watch. 19.4 to 19.6 is kind of that upper end resistance. 18.4 to 18.6 is that lower end support. That's the range we've been trading in. This thing's going to move outside of that range, in my opinion, over the next couple weeks. One other area to really look at here, CME futures, okay? In the history of CME Bitcoin futures, whenever there's been a gap, okay, and a gap has been, a move of like 5% or so, that gap has been filled 95% of the time, there's a gap sitting out there on the downside at 17,000. I'm not saying it's going to fill there today, tomorrow, next week, but 95% of the time CME futures gaps have been filled. So, people should just be aware of that.
Interesting. Okay. Yeah, because it did the big reversal around the weekend after the sell-off,
Yep.
right? Interesting.
Exactly.
Okay. All right, Scott. Like it. Good stuff. Thank you, Mr.
Thanks,
Bauer.
Oliver.
Really like these conversations to looking at gold. When we come back,